Oliver, we're talking about Hargreaves Lansdown today, but when equity markets are going off like a rocket and UK companies are listing left, right and centre, why wouldn't I buy a UK stockbroker at this point?
That's a very good question, and it does seem like a good time to be owning stockbrokers. Certainly, Hargreaves Lansdown, the biggest independently listed stockbroker, has had a marvellous run, not just sort of over the past year or so, but since it floated in 2007, the shares have gone up from about £1.60 to £14, and there's been some dividends along the way. A great return for anyone who got in at the start, and the shares have just kept climbing and climbing and climbing, but the result of that is they're now on quite a steep valuation.
So how about the numbers today? Do we like them?
Well, the market doesn't like them so much. The shares are down 6%, slightly disappointing, particularly in the profits line. The interest that Hargreaves Lansdown gets from the cash it invests was lower in the period than maybe people thought it was going to be, so that's depressed it. But the bigger picture was actually quite impressive, a big 43% increase in the amount of assets that the company administers. A lot of that was due to the Royal Mail float. Hargreaves was a big part of getting that float out to the British public, so lots of people invested through Hargreaves. So that's brought a big increase in customer numbers, but still it's been quite impressive growth from the company.
And is Hargreaves Lansdown vulnerable to changes in sort of the charging structure for UK retail investing?
Well, that's the big change that's going to be coming in the next few weeks. The Retail Distribution Review, this is a regulatory change in the UK, has changed the way in which companies such as Hargreaves can charge for their services. It used to be the case that a Hargreaves client would buy a fund from a manager such as, for example, Jupiter or Aberdeen or whoever, and Hargreaves will get its money via a rebate from the fund manager. Now that's different. Hargreaves has to charge its clients directly a fee, and in fact all of the companies do. So in the last few weeks all of these companies have been outlining their new fee structures. Hargreaves comes towards the top end of that new structure, so it's not clear exactly how that will play out. Now it may be that the people sort of decide that they're not going to move their funds based on small percentage point differences in fees, or maybe that they get very price sensitive.
Okay, well, retail stockbroking maybe isn't such a great business. Where does like another opportunity lie?
Well, the big opportunity, I think, really is perhaps in corporate pensions and pension savings more generally. For many years, the UK has been used to defined benefits pension schemes, where a company guarantees its employees a certain amount of pension. Now that's far more moving to what's called defined contribution, where people have to put money into their own pensions. And there's a big opportunity in administering these sorts of pension schemes, particularly through the corporate route, which Hargreaves Lansdown is looking at now.
Well, defined contribution pensions, a terribly exciting business. Oliver, thank you.